The collapse of Terra USD, a so-called stablecoin, sent repercussions across markets on Friday, with Bitcoin trading at $30,000 and on track for a record-losing streak. Concerns about high inflation and rising interest rates have triggered widespread selling of hazardous investments, including crypto assets.
The last couple of weeks have been a turbulent time. You've seen a precipitous drop in Bitcoin, and you've also seen earlier this week and continuing today a pretty spectacular explosion in a stablecoin, or what's called a stablecoin, UST, that attempts to mimic the movement of the US dollar, but in this case failed to do so pretty spectacularly. And that's another thing that creates some concern amongst regulators and amongst investors.
This week, Terra USD lost its 101 peg to the dollar as its method for maintaining stability, which relied on another digital token, failed under selling pressure. Tether, the largest stable Bitcoin and one whose producers claim is backed by dollar assets, has also been under pressure. According to CoinMarketCap data, it plummeted to 95 cents on Thursday, but was back to $1 on Friday. Even stablecoins backed by traditional assets were showing signs of stress on Thursday, and as cryptocurrencies are recent, it is hard to predict a bright future.
When you look at something like Bitcoin, which has been around for less than 15 years, it becomes even more difficult to predict what will actually happen to this instrument in a week's time, in a month's time, in a year's time.
The U.S. Federal Reserve warned that stablecoins are vulnerable to investor runs because they're backed by assets that can lose value or become illiquid in times of market stress. Will Tether, the largest stablecoin, and other cryptocurrencies recover or face a financial crisis?